This is a silver chart, just showing on a daily basis, and obviously it looks like the downward trend is kind of coming back in place. I was kind of remarking that this looked like a reverse hammer yesterday, and sometimes technically that means that, it's going to reverse the upward trend that we're going in for the last couple of days. And a reverse hammer, that usually sometimes means a downward trend's coming up. Well, what happened is, and I saw some of this data before about the manufacturing slowdown in China. Of course, that's gotten to be pretty much mainstream news. And also there was other indications about Germany and France, which are the two biggest nations that have economic output in the European Union. So, I guess the news is starting to hit. Now, I think later we're going to see on Monday, that'll be April 2nd, we're going to see new data on this JP Morgan Global Manufacturing Index, and I expect it to be down. So, as these stories, even though kind of people know about them or know it's coming up, sometimes a lot of that stuff wasn't priced in the market, and there were some stories out there saying that the Chinese slowdown wasn't priced into the market. And, quite obviously, stuff is going on a day-to-day basis, whatever story comes out at the time. Now, I'm still doing kind of a protective short on silver. I'm probably ahead a little bit now, finally, again. But, actually, I'm still kind of long on a lot of commodities, so it's kind of like protecting me. I'm too bullish on commodities. I think the general trend is downward, and if silver goes below 30, gold goes below 1600, I'm going to sell off those short positions and just hold more cash and see how far down it goes, if I can guess this right. As far as gold, same thing. It went down today. All the commodities got a hit today, and it was just over news that there's been slowdowns. Now, in the case of the oil market got hit also, but still it's well above that critical 103 level, and I think it's going to stay above that. Now, I don't know, I saw this story yesterday. It wasn't a story. It was basically a blog post that Brzezinski died in a hospital in Israel. I still haven't seen nothing on that. It could be a total garbage blog post. It was from a person who stated on the thing that they were posting from Israel. I don't know, but I want to keep looking into that, because it's not so much that I care about the rumor. It's that I think Brzezinski was one of the main guys that was holding back. He's got a major influence in policy making. I know there's a lot of things going on besides Israel's influence and stuff like that, but I could also state that if, say, Dick Cheney was president, I think we've already been attacking Iran already. I mean, if he was president in 2008, the attack would have happened already. That is why I never think things are 110% rigidly planned. Sometimes I listen to this Lindsey Williams, but I also said, if he was talking to Pompey back in the Roman times, and even if he got it right from him, I mean, still the guy does not always know the outcome of what's going to happen. There's a lot of push and shove, and there's a lot of different elite. I don't know about that garbage. Anyway, as what I think, though, I think that was a very important story about Brzezinski. If that's legit, boy, I'm very curious about that, because if he did in fact die, I think makes a more of a chance that Iran will be attacked sooner than later. So that's why I consider it important. And to me, that tells me to hold in this oil position. Actually, right now, this market still says to hold in it. Something could possibly happen that could bring it up. Now, today's news on the oil was that there's excess inventory. The inventory is going up. It's going up. Plus, they started talking about releasing some oil from the strategic reserves. And I'm thinking to myself, why are you talking about that? That was last time they did that same dumb rumor, and it would turn out to be a rumor. It was a mistake. I personally think those kind of rumors are games they use to play the markets up and down. To me, that's quite obvious. But my head also thinks that when they're throwing the curveballs like that, to me that's telling me oil is going to go up. And I noticed it didn't take that much of a hit today, actually, when you're considering like everything took a hit. You know, whether it was silver, gold, oil, whatever. Everything's down about 2%. Palladium went down quite a bit. And I'm glad now I got out of that palladium position. I don't know if it's going to keep going down, but I think palladium might go below 600. Maybe if there's something catastrophic going below 500. It seems crazy, but it might. But if this thing goes below 600, I probably am going to buy it back. And today I bought back a silver stock. You know, some money. It was cheaper. I got it back cheaper, and it was about the lowest it was in so many months. I said, you know what, the heck with it. I got it back cheaper. So I think, you know, I'm a little too bullish on the commodities, but I think the commodities are in the right place to be. And I want to point out a reason for that. Let's look at interest rates. You know, this is a good thing. It's on forexpros.com. It gives you a nice list of all the central banks' interest rates. Federal Reserve, the European Central Bank, the Bank of England, Swiss, you know, zero. Reserve Bank of Australia, Bank of Canada, Reserve Bank of New Zealand, and Bank of Japan. So you can look at all the central banks' interest rates, and you can click on these charts down here and see what they are. But you notice everybody's last changes pretty much, except for the Bank of Canada, which actually that was back in 2010. They raised it a quarter percent to 25 basis points, or quarter percent. All of them are going downward, and you know, of course, the Federal Reserve is like 0.25%, and the other currency that I consider safe currency, a currency I consider safe currency, Swiss franc, 0%. I don't even know why you want to use a bank. In any of these cases, I don't even know why you use a bank. I mean, in case maybe of the Bank of Australia, it makes sense. You got 4%. But that is the reason to stay with commodities, because basically they're trashing all the currencies. And you're not getting any interest, so forget about it, you know. So the commodities basically will go up. And I think short term, on Monday, we're going to see the new values on this thing for the global manufacturing index. It's going to be down, so the commodities will probably take a bigger hit short term. But after this period is over, you know, like looking at when, you know, how much longer could this take to drop? Could be, you know, a week, 2 more weeks. I don't know. You know, usually silver seems to take a very hard drop all at once, so you know, you can't really just draw a line and say that's the, you know, where it's going to be at, and the drop will be here at the end of April. It might be more like the mid of April, or April 10th, or maybe Monday might see a significant drop, or maybe even this week. I still think this trend is downward. It kind of like convinces me again now that I'm seeing it drop further. As long as Bernanke does not say anything about QE, this stuff is not going to go up. I don't think he is. I don't think he is just yet. So I'm holding on this protective short position, and I'll sell it off as soon as silver goes below 30. And you know, technically there's a couple things that indicate possibly silver is going to go all the way down to the bottom of this chart, but I just can't believe it either, because I'm too bullish on silver. I just can't believe it. I just can't believe it. So if silver goes below 30 and gold goes below 1600, I'm selling off my short positions. And as long as I made some money on it, I don't care. I'm going to hold cash and see what kind of opportunities come up, and hopefully I can pick things near the bottom and ride the commodities back up. And you know, as far as collecting 0% interest or 0.25% interest from the Federal Reserve, forget about it. I don't think that's a good deal.